Hey guys, it's Mark here from ETF Tracker, and this is the ETF Tracker show. In this segment, it is the interviews with experts, and we've had a few in the last couple of weeks that we've spoken to, from the exchanges to robo-advisors to advisors as well. So definitely check out the back catalog for those in the YouTube playlist and also on Spotify. In today's episode, we are speaking with the folks at 9 Mile Financials. We've got Kevin Feerick, who's one of the partners over there. They are a market maker in the ETF markets. And if you didn't know what that is, you'll learn more about it in the show and you'll realize why it is so important to have market makers for ETFs. So we hope this is educational and we hope you enjoy the show. Okay, guys, we've got Kevin here. Kevin, welcome. Thanks for being here for the ETF Tracker show.
G'day, Mark. Nice to meet you virtually.
Yeah, exactly. It'd be so much better to, as we say to all the guests, to meet in person, but unfortunately we'll just have to wait. I think it was pushed back to later in September again, but we'll see. Who
knows? Yeah, fingers crossed.
Yeah, exactly. So look, before we get into it, it's always good to get to know the guests. So some people that listen to this, they're already in the institutional kind of space and they know who 9 Mile is and they might know who you are, and that's great. But for the other audience out there globally, in Australia, wherever they are, could you tell us a little bit more about you, how you got started in the financial markets, and say what drew you to the ETF side of things, where you're currently playing?
Yeah, for sure. So my background, I'm Irish, as you can probably tell by the accent.
Yeah.
But yeah, so I kind of fell into financial markets to some extent. I studied computer science a long time ago. I don't even know which year I graduated, around 2000, I think. And kind of went along to, campus recruitment, I think, at Deutsche Bank at the time, where kind of doing the graduate rounds. And I was just trying to score a free flight over to London so that I could go visit some friends over there, to be honest. And I managed to get through their grad recruitment process and started a job there. And my first job was just big, massive trading floor, working and supporting their bond trading system, and I loved it. Like, I really loved the trading floor atmosphere, the busyness of it, just that environment. And as a kind of more on the technical side, it's just endless technology problems to be solved. And just found it really interesting, really enjoyed the people that I worked with there. So I went, had a couple of jobs in different investment banks in London, kind of what was in the whole structured credit CDO space that preceded the GFC. So I was at Deutsche and at Lehman Brothers, so I had a bit of a ringside seat there. I knew a few of the characters that
I can imagine.
became infamous in the aftermath of that. And then moved to Oz back in I think 2007. Worked for Macquarie, which is kind of a bit of a background into how 9 Mile came to be. Because I think all of us have done stints, or certainly all of the people that were there at the start had done stints in Macquarie, and that's how I knew the guys. Worked at Westpac for a while in their FX space, again, kind of on the trading technology side and getting that sorted out with them. So 9 Mile then came into the picture about late 2016. Morgan Potter and Gordon Reid, who are the two founders, I'd worked with them at Macquarie.
Nice.
And they'd come back to Australia from a stint in New York.
Wow. Okay.
And they kind of tapped me up and said, "Are you interested in doing something completely new, something completely different?" I hadn't actually worked in the ETF space up until that point. Those guys had kind of deep experience in that area. It was decided to jump ship out of the big big organization, the comfort blanket. And into an office in WeWork in Piermont, which is where we were at the time. And there was 4 of us sitting in a room with 4 computers, and where do we start? What do we do now?
Startup world.
Yeah. So, yeah, look, that was, we've had a lot of fun. It's been a hell of a lot of work as well.
Mm.
But we've definitely had fun doing it. And you get to, there's all trade-offs. There's no perfect environment. Big organization, obviously, you do have, you've got a big balance sheet, and you've got all those nice things, very regular salary, and
Yep.
but there's a lot of frustrations, and certainly on the technology side, it's becoming harder and harder for those big organizations to compete at the kind of pointy end of the technology problem.
Yeah, absolutely.
So that was a key driver for me anyway. Was,
Okay.
This is a place I can go into, and we can kind of set the technology agenda. We know market making is very, very, very competitive on the technology side, and we can talk a little bit about that. But yeah, so it was, this is a chance to do what I really love to do, to be honest, is solve those technology problems and add value to a business. So yeah, it was a great move. It's definitely certainly one that I've enjoyed. It's brought a lot to me. I've learned a huge amount over the last 4 or 5 years.
Yeah, we should probably do like a separate kind of chat. I don't know what podcast is going to go on, but just you being there as part of, the whole kind of Lehman Brothers and Deutsche and working in, structured kind of products like that. I'm sure many would have questions for you, but, you and I are kind of kindred spirits in a way. I didn't know that you've come from a technology background and gotten into finance or fell into finance. That's exactly what happened to me, to get into roles in Melbourne and London and the ASX. It was from technology. So, that's another topic maybe we should save for another podcast. But let's jump into a little bit more about 9 Mile that you mentioned there, and, a little bit about the growth and stuff. But for people that may not know already who 9 Mile Financial is, can you tell us a little bit more about that? And more generally as well, what is the role of a market maker? I'm sure that many people, retail traders especially, wouldn't really know what that is.
Yeah, 100%. So I'll just speak to 9 Mile first. So we so we're a market maker, which we'll talk about. We're headquartered in Sydney. So we're Australian firm, majority owned by our own staff. So we're pretty small, focused, as we like to say. We're a focused team, and we're new.
Yep.
Relative to the people that we're competing with are generally kind of bigger institutions, headquarters overseas, usually with maybe satellite offices, as APAC might be HQ'd in Sydney or somewhere up in Asia. So they definitely have a bit more muscle. I think I was telling you earlier, they're like the evil empire. Well, I shouldn't call them evil. They're like the empire.
Star Wars, yeah. And the Rebel Alliance.
We're the Rebel Alliance. Yeah, I'm not calling myself Luke Skywalker or anything, but for the Star Wars fans out there. So we're in that space, and we market make. And what a market maker, we've got a few functions, I guess, as part of the market making role in the market. We work really closely with the fund issuers. So, BlackRock recently appointed us as their designated market maker in Australia.
Wow.
And we've got great relationships with all the issuers because we market make. I think there's 230-ish ETFs in Australia. We market make about 150 of those.
Wow.
Actively. So we've got pretty good coverage in the equity, domestic and international equities and fixed income. We pretty much cover all of those, which make up the majority. So a market maker works very closely with the issuer, and it's our job to provide liquidity for that ETF. So when an investor wants to go in and invest in that fund, we're selling the fund, providing liquidity on both the bid and ask side of the book. We are also responsible for maintaining fair prices and reasonable spreads. The spread being the difference between the bid and the offer. And so we work very closely with the issuers to make sure that the markets are investor friendly and the pricing is tight. The pricing reflects the pricing in the underlying assets that make up that fund. That's the primary dimension that we price around. We spend a lot of our time and resources on technology so that we can calculate extremely kind of responsive pricing. So as the fund valuation or the net asset value of the fund changes and the underlying prices in that fund change, we update our NAV real time, and then we price around that. So the idea there is, the investors are getting in and out at fair and reflective values of the ETF. So we're regulated, so we fall under ASIC's regulation for market makers. So there's a whole bunch of requirements around that to make sure that we're behaving in the investor's best interest, and we obviously take that extremely seriously. I guess we have a view on the market as, really the growth in ETFs has been phenomenal. We can talk about that. And that is really driven, in our view, by the value that the ETF structure brings to the investor in terms of its simplicity of distribution, its the real-time pricing that we talked about. So to us, it really is, if whatever we can do to drive that growth in the ETF, and whether that's providing tight prices, providing prices and deep liquidity that investors can get, they can be assured that even in times of extreme volatility like we had last year, when between whatever it was, February, March through to kind of our winter time was pretty crazy in terms of the trading volumes and volatility of the underlyings. We want to be there. We want to be able to trade at all times, and we're obliged to be able to be there and trade at all times, and so that people can, transact with confidence, and they know that they're getting in and out at prices that reflect the value of the underlying. I think last year when liquidity really dried up in some of the underlying markets, certainly in the fixed income markets, and ETFs were actually a really important vehicle for market stability, where risk managers could get in and out of those markets, price discover through the ETF, because the underlying markets were just all over the shop.
They were gone.
So that's the role of the market maker. It's one of those things that as an end investor, if you're going through your ComSec or whatever it is, you don't know who's on the other side of that trade. You probably don't really care as long as you're happy with the price. But you certainly notice when it's not there.
Exactly. It's like the CIA. You guys, they always say with things like, you watch the movies, you don't know that they're like, the world's going forward, just like the ETF markets. People need to have you guys there, but they just don't realize that you are there. You're helping them. Yeah,
exactly. So that's us. We're mainly focused in Australia, as you know. We've got a number of mandates across different issuers to proactively market make their funds. We market make other funds on the basis of just providing liquidity. We're it's a very competitive industry, and we can talk a little bit about the technology side, which, as I alluded to, we're in competition with firms that have been doing this longer than us, maybe have more resources, or certainly have invested more. I guess where we see that we can bring value is in terms of the technology expertise that we have and the team that we have. Certainly we've got a great platform to allow us to compete in that space. We've also got a great super trading team. We had a couple of big hires earlier this year, which has really boosted our trading capabilities. So we managed to a couple of gentlemen from a competitor, which was
Oh, that's always nice.
coup for us. Yeah. And so that has really broadened our reach in terms of the number of ETFs that we quote. As I said, we're in about 150 names. So,
yeah, I was going to say that's
so
a
an
lot.
exciting.
That's a lot of names for, you know, the Aussie market. If investors didn't already know, like you said, it's 230, maybe close to 240 kind of ETFs that are out there. And if you're covering over half of that as a small, you know, I don't know if you're still a startup, it's been 4 years, like an up and comer. An up and comer. It's pretty impressive.
An up and comer, yeah. Yeah, it's you know, as you know from your own work on the ETF tracker, it's you know, it's a growing market at a kind of, you know, relentless pace. There's new funds coming on all the time. You know, we certainly have you know, there's a very busy pipeline of things coming. So the number of funds is just, you know, growing and growing, and I think, you know, will continue to grow for the foreseeable future, you know, without, you know, staring at the crystal ball too hard. And so, yeah, so our business model is a scale business model. We need to quote and trade as many of these things as we can. You know, we hope, you know, there's something there in terms of the range of funds. You know, it already feels like there's something there for everyone, and I think that's only going to be
more, you
know, a trend that just grows and grows and grows. You know, I mean, we can talk about kind of where the market's going and what's happening, but you know, it's just a growth story really. In terms of, you know, obviously assets under management, you probably know better than me. I think it's about 120 bill or something now.
Yeah, very close.
And you know, that's a number that's a point in time, because, you know, next month it's going to be
it'll be
more next year. Yeah, and the growth over the last couple of years really is ramped up.
Pretty impressive, you know, like it's the 20-year anniversary this month for ETFs. If people on the show didn't know, it's like 27th of August 2001 was when the first one came out. But, you know, you just mentioned growth there. And so what are your, you know, not necessarily 9 Mile, you know, this could be personal opinion, but what are your thoughts on the growth of ETFs in Australia? Did you expect them to get as popular as they are? Like, considering you got into this space in 2016 or maybe a bit before then, did you see back then that we'd get to the levels that we're at now?
Yeah, well, it's as I said, I was you know, I was a relative newcomer back when we started 9 Mile, but you know, Morgan had a pretty long history in the ETF markets. I think he was there right at the start in Australia. And, you know, we talked a lot about, you know, in the early days of 9 Mile, what, you know, guess what's the vision? What do we want to do? And, you know, he was really, you know, really sold, certainly sold to me that ETFs are, you know, they're a great product. They've got so many advantages in terms of what they do for the investor, that, you know, I guess, you know, he really believed in ETFs as a product, and he certainly, you know, was able to share that vision and share that belief. So, you know, my own personal view is, you know, because of the advantages of ETFs, you know, the ease of distribution, the low cost of transactions, the transparency, that, you know, they are a product that's here to stay. The growth is here to stay. I think we see more and more, certainly in the, you know, kind of look to the US as always being, you know, where you look to what's coming next in terms of ETFs. You know, they've led the market from day one. And you just see, you know, the growth is not slowing down there. There's more and more, you know, US mutual funds switching over to ETFs, you know, different product types. You know, crypto, you know, is obviously a bit of a hot topic at the minute. That's, you know, there's a super popular crypto ETF in Canada. I think the US regulator some feel like it's too far away. I think once that moves, probably ASIC will get there.
They got the consultation. Yeah, they got that consultation paper out as well. I'm not sure if you've seen that.
So I think they've spoken about the end of the year on releasing something next. I'm not saying that that's going to be approved by the end of the year. I'm not sure that's going to be the case, but certainly they're working on it and they're looking on it, and you know, the exchanges, the issuers, everyone is on the case, so to speak. So yeah, I think that will happen at some point. I think, you know, ETFs have been a really popular product with younger investors. I think the younger investors kind of get it, and have been driven somewhat into the ETF market, certainly locally, because obviously with the situation in the housing market, that's, you know, very difficult for young people to get in there. So they've had to look to alternative ways to invest their spare cash, and ETFs has kind of been in the right place at the right time in terms of that age group. So I think as that cohort you know, gets older, gets wealthier, I think that will really drive a lot of ETF activity in particularly in Australia. You know, and there's a whole you know, trend around how we manage our super, and you know, that market's been broken up as well, and you know, being disrupted. So I think that also plays into ETFs as a product, and I think they're a natural kind of, you know, direction for those super disruptors, if you want to call them that, to move towards.
Yeah, it's certainly going to be interesting. And you mentioned a couple of things there, like us looking to the thematics and things happening overseas, like you mentioned Bitcoin there, and there's also this move towards like ESG and cloud computing and some other types.
Yeah.
Have you seen anything else interesting in your, you know, your kind of view of the markets, that you, whether or not it's coming here to Australia, or was there anything interesting apart from like the Bitcoin and the kind of ESG that you saw, that you've seen that, you know, is,
you know, certainly there's issuers out there that are getting, you know, a bit more exotic with the ETF structure and wrapping some kind of, you know, structured product characteristics into ETFs. I know that's a growing sector in the US. Look, our view on that is, you know, we love the simplicity of ETFs. We love, you know, that there's, you know, through people like yourself, through the content and the material that the issuers put out there, you know, there's a wealth of information on what is in these ETFs, you know, what are the characteristics of the funds, what are the themes. So we really like and value that simplicity. So, you know, whether they're kind of more, I guess, ETFs that have some kind of optionality built in, or have some kind of structured product characteristics, I don't know. You know, I'm a simple man. I like simple things. So whether that takes off, but that's definitely an area that there's a bit of noise around in the US, at least. You know, there's just such a wide range of existing investment vehicles. You know, fixed active versus passive. Obviously, active funds are coming on now. You know, that's another huge area. We see more and more active managers, you know, smaller issuers that are going the ETF road to get their funds out there. So I think that's going to add huge variety to the market over the next kind of 5 years. Just more and more of those actively managed funds. Again, you know, as long as, you know, really it's about the investors having the information so that they can make informed decisions. And you know, as long, I think the ETF market's been doing a pretty good job in terms of that supporting information and transparency, and that's what we want to see really continue.
Okay, well, that's really good, and hopefully we see more of these new and innovative products. I think there's a new release. It was in the news. ETF Securities have a new ETF coming out, and I'm sure we're going to see more active ones coming, just given the popularity. Speaking of new types of products, or products that people haven't heard of, you guys do some interesting things with a product I've only recently become accustomed to, available on TraCRs. It's called TraCRs. TraCRs for those of you that are listening or watching. But you guys do some stuff with TraCRs. Could you tell us a little bit about what they are, and you know, what's special about them?
Yeah, sure. So TraCRs are, I guess, for anyone that's familiar with the kind of ADR concept or depository receipt, it'll be very where you have an overseas stock listed on a local exchange. So TraCRs are listed on Chi-X exclusively. And TraCRs allow Aussie investors to buy and clear a locally listed name. So the TraCR is a tradable instrument on on the exchange, but provides direct one-to-one exposure with a US stock. So I think there's about 45 ish names in the TraCR universe. You know, Tesla, Pfizer, obviously quite topical at the moment.
Yeah.
You know, there's a bunch of pharma names, more traditional names like IBM are in there, some of the financials, Zoom, things like that. So names that people either, you know, very kind of blue chip names, or names that are kind of contemporary and investors are interested in gaining exposure to. So you buy the Chi-X listed instrument, and then the issuer will go on your behalf and buy that instrument in the US, and it gets held in custody over there. So it is a great way for people who are interested in those types of stocks. You know, the you don't have to worry about buying US dollars or anything like that. The foreign exchange component is all kind of wrapped up in the structure. So there's
hedging and all that kind of stuff.
Yeah, exactly. Yeah, so there's certainly a convenience factor there. Sorry, they're not hedged. They're currency unhedged. Yeah, just read the product disclosure statement.
Make sure we'll
for anyone that wants to get into the TraCR market. I think there's a website, tracrs.com.au, TRACRS. Stands for transferable custody receipt. So as I said, it's pretty much analogous to the depository receipt concept. But yeah, it's Google it, and the website should come up. They're listed on Chi-X. They've got all the information there in terms of trading volumes, prices, which we provide.
Awesome.
You know, the PDS and all that kind of stuff is on there. So yeah, I'd encourage people who are interested in trading US names to go have a look. And that's, you know, they should be available on your ComSec or whatever local brokerage account that you use.
That's perfect. And it's always cool to, you know, we see it in ETFs, but this is not an ETF. It's another type of tradable product. But yeah, it's good to see innovation like that. No, it's a new product. You know, it's certainly becoming more popular. We've been providing pricing for TraCRs. I'll probably get this wrong, but about a year, something like that. So we certainly see it growing popularity in that time. Yeah, as you said, it's not exposure to any underlying fund. It's one for one, you know, single stock exposure. So yeah, it's a simple product. It's a convenient product. So yeah, I'd encourage your watchers, viewers to go check it out. Yeah, perfect. We'll make sure that we include that in the show notes. And speaking of the show notes, we'll put all of the 9 Mile kind of details there, and to some of the terms that people might be unfamiliar with, like ADRs and some other things there. We'll make sure that we put that in the show notes. But if people are interested in learning more about 9 Mile, or say following you and some of the things that you do, can they follow you on LinkedIn? Are you on LinkedIn?
Yeah, we're on LinkedIn. So yeah, I'd encourage people to look us up there.
Okay.
Always happy to chat. You can contact us on LinkedIn or via our website, which is just 9milefinancial1word.com. But yeah, LinkedIn is probably easier for most people. Yeah, we'll drop us a line in there. We'll get back to you. Yeah, we can obviously at the moment we're all kind of locked in our bubble, but you know, once things open up, we're around in the CBD in Sydney, and yeah. Okay. Hopefully we'll get to meet up with yourself and share a beer or wine or something at some point, and get
definitely
to chat in person.
Well, definitely looking forward to that whenever that is this year, or hopefully, you know, hopefully this year, might be next year, who knows, but we'll keep an eye on that. But look, Kevin, thanks very much for your time. We really appreciate all of this valuable kind of insights that you've been able to provide. I mean, I learned just in this little half hour quite a lot that I didn't even know about market making. So I'm sure if I have, then the viewers will too. So thank you very much.
No problem, Mark. Thanks for the time.
Okay,
Cheers.
cheers. Well, that was certainly fascinating. Again, we have such amazing guests on this show, and learning about what market makers do, you can see now why it is so important for the ETF markets to function. So there was a lot of great insights there, and if you're interested in any of what we went through, definitely check out the links in the show notes below, and please remember to like, share, and subscribe. Have a good day.